Bitcoin down to 85,000 a coin. Google down to 175 a share. Amazon trading down to $204 a share. So what are you supposed to do on days like today? Do you panic and sell? Do you dig in and buy? Like, what is it that you're supposed to do when the market's crashing the way it is right now? Stick around. Today should be a great video.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and how are you today? I hope you're enjoying the day, despite all the market turmoil and the news on CNBC and how scary they're making it sound. Before I forget, before we even get into what you should do on days like today, if you could do me a favor and hit that subscribe button and smash that like button, really appreciate the support. It's all I ask of you guys. I'm not selling anything else. I'm just speaking my mind on YouTube and sharing some information that I like to watch. And that also reminds me, none of this is financial advice. Please don't listen to me for any financial decisions you guys make. You need to reach out to your own financial advisors and do your own research. This is just entertainment purposes only. So, what do you do on these big down days? I guess it depends on what your goals are with your investments. Now, I don't touch my set it and forget it account. That's the whole point of it. Sometimes I'll have a conversation with the advisor and just talk myself through it. If I'm looking to jump off the ledge, I'm really trying to talk myself out of doing it. But then in my trading account, I actually dug in and bought today. When I saw the way that Amazon fell from like 210 down to $204 a share, to me that looked really panicky. And that's what I'm looking for in terms of a trade. So I dug in and I bought some Amazon. I think I paid a little above $206 a share. It's working out right now. And it's possible it retests those levels, but it really shouldn't continue significantly below that unless it's got more room to run on the downside. Like when I'm trading, I try to see where it gets support, and I hope that that support holds. Now, of course, I hope it goes straight back up, but in reality, at least when I was in the pit, when it made a new low and it really felt like panic, it tended to drift higher and then it would go back down. It would retest those levels on lesser volume. But it was still nerve wracking because it went down there and you just didn't know if it would follow through to the downside or if it would hold. So, either way, that's kind of what I look for. So, I dug my heels in, picked some up, and I plan to hold it all the way back up to the $240 range if it continues the way I hope it does. It was panicky today. And the rhetoric on CNBC scaring people, talking about the tariffs and all the other things, I could hear the nervousness in the commentator's voice, even though I don't think they're really nervous. They're consistently watching the markets the same way I do. And I try to fade nervousness and I try to fade excitement. So that's my advice on a day like today is that you should be looking around for the things that you've wanted to buy for a while and potentially buying them. I mean, if you've wanted to buy Bitcoin, well, looks like a good enough level and hopefully it holds. You just have to be prepared that it may not. Like, I'm wrong plenty of times, which is why I say don't listen to me, is because don't listen to me. You have to trust yourself with the things you're buying. You also have to recognize what you're hoping the money will do. Like, I wouldn't use money that I need to live on to buy Bitcoin. Like, that's just too big a risk for me. I'd be too worried that it would become less money, and when I need to use it for what I need to live on, that it's no longer the value it was when I bought the Bitcoin. Now, if it's something that is gambling money that I'm totally not worried about, and that was what I wanted to put it in because I was hoping to hit a home run, well, today's a great day to do that. And if it goes lower, oh well, I was wrong and maybe I was early. But if I actually believe in the thing I'm buying in, today is probably a good opportunity to get into it. The interesting thing is it does still feel like a rotation. I don't know if that rotation has overextended and gone too far, especially because it did really look like a bottom to me. Just in Amazon, I don't know that it wasn't it. Meta did too. Meta trading down below 650 was really attractive to me, and I picked up a little bit of Meta as well The only problem with Meta is it's my largest position in my set it and forget it account. So when I buy it in the trading account, I tend to overreact sometimes because I know the position I have in the other, even though I tend to try to ignore it. But either way, I would be looking for the things you want to get into today. But the rotation is what I've really noticed. It seems like people getting out of Mag 7 type of stocks and other things that have run to the upside, like Palantir and some other high flyers. And the money seems to be flowing into what I would call safety stocks or dividend paying stocks, like Altria Group has done really well. So has Archer Daniels Midland, which I mentioned the other day. I know Hershey's was. I actually, like I said, when it felt like it overextended to me, I saw that as an opportunity to kind of lighten up that trade. So I got out of it yesterday or the day before. I know this morning it was up even higher, and I don't know if that's an overextension to the upside, but there were a lot of companies I saw move the other direction, meaning they were going higher despite that the high flyers were pulling back, which tells me it's a pretty natural and good type of move because the money is still there. It wasn't one of those days that everything was just collapsing because everybody needed money and they're trying to raise cash. It looked like people rotating out of, Meta, Google, Amazon, Palantir, MicroStrategies, which dropped over $100 in the past week or two, but then into Pfizer or things that people aren't really paying attention to. Whirlpool held up really well, which is one I've talked about a few times that I've really liked, and so did Polaris, which is another one. And it's not that I'm saying these are the greatest companies in the world, but people just see them as less risk. And part of the reason I look at them as less risk is they've already adjusted their price based on a lot of bad things happening. So if the economy slows, they may actually hold up okay. What I liked about Polaris when I was talking about it is it's already fallen so far, it's preparing for a recession and a slowdown, in my opinion, the way that the stock is being priced right now. So if that comes around, I'm hoping the stock holds up well. And if it's not as bad as what's already priced in, it doesn't need a whole lot of sunshine to really turn around and do well. The funny thing with the timing of the market move, and I don't know if it was my body sensing, is I had just done a video somewhat recently talking about how maybe it was time to rotate out of some of those things myself into a portfolio that was a little more dividend sensitive or paid dividends because I'm getting to an age where it kind of probably makes sense for me. Forgive that I keep stopping and going. I don't know if you hear it, but there's a helicopter circling the house, probably looking for me for whatever I did this time. Just joking. But it's flying around, and I don't know if it's interrupting the video, so I keep hitting pause. Now that the market's corrected a bit, I'm going to be stubborn about making that transition because I don't want to get out of the things that I was thinking about getting out where they are now. And really, it is a set it and forget it account. When I've put on those positions, my goal was 5 or 10 years of being invested in those companies. It's more that I've been really fortunate where they've gone, and it probably does make some sense to take a little bit off and move it into things that just pay some dividends and have a little bit less risk in terms of market fluctuations. So that's also why I always say, you need to do your own research and you need to make your portfolio fit your goals for you. Is it's super important for everybody to recognize what it is the goal of the money is. Now, I know it's to make as much as possible. It's to be able to live off of when I'm ready to retire. I know everybody wants to make as much as possible and never lose and get huge dividends, but realistically, you should really think about your goals and what you want it to do and what your time frame is. I mean, if your time frame is 30 or 40 years out and you have a certain amount of money to be able to invest, maybe a certain portion should go into something risky that is if I hit a home run, I would like to hit a home run. Or maybe you just don't feel comfortable with the ups and downs of things that move like that. And you should be in super safe things because you don't want to take that kind of risk, and it's too uncomfortable when things become worth more or less money. So do the research on your own, decide what fits you, and then go from there. I mean, I still think economy is doing just fine, which is why I look at the price movement as just, nervousness and excitedness in the markets of getting over extreme on either side. I think as long as employment stays okay and people don't have some mass exodus from some black swan event, that businesses are doing okay. The Walmart report was actually good, even though the guidance going forward it was a little bit nervous. I think it's interesting how when the stock sold off, people read into it a whole lot more than I would. Because part of what I think is that it's just at a really high valuation and earnings were good, but maybe it's a little overvalued. If Costco did the same type of thing, I would feel the same way. I love Costco. I really want to be invested in them pretty heavily, but at somewhere around 50 PE ratios, it just doesn't make sense to me. And if I just don't own it, I guess I just don't own it, even though I'd like to. I mean, I try to ignore valuation to some degree when buying what I want to own for a long time, but it's very hard for me to totally ignore it. Either way, I hope that your Tuesday is going well. I hope that you didn't get too stressed from the down move today. And I hope the rest of your week ends up great. Hopefully, Nvidia has great earnings tomorrow. I'm expecting they'll have great earnings. Hopefully, the stock reacts really well. It creates a little bit of a lift for the things that have struggled for a while. And maybe we get a bit of a reversal tomorrow. Anyway, again, thumbs up, like, subscribe. Make some comments in the comment section. Did you buy anything today? Did you sell the past few days? What's going on in your account? Have a great one.